Dan Ives joining us now, of Wedbush joining us over the phone. An outperform rating on Tesla and just cut its price target, though, to 365 from 390. So, Dan, unwrap this for me. How do you identify what is down to a logistical nightmare and what is down to softer demand?
Yeah, so let's not sugarcoat it. I mean, this was what I would call a debacle in terms of an overall quarter. I think you have to slice it to Model 3 demand versus SX. I mean, Model 3, if you also include in-transit, I think the quarter is better than feared, which is key because that's obviously what I view as the linchpin of growth going forward. But S and X, which remember, those are the most profitable vehicles, those essentially fell off a cliff. And Tesla's almost sunsetting those vehicles. So I view it as I'll say about 40% of this is logistical issues, 60% of it is demand issues. So that's why I think right now it's a black cloud over the name. We still are bullish long term, but no doubt, I mean, this is something where you're expecting softness, but they came through with what I view as a C- quarter.
So, Dan, sometimes people predict the right story, but the story plays out quicker than anticipated. Is this pretty strong evidence that Model 3 is cannibalizing the demand for X and S?
Oh, yeah. I mean, if there's a headline here and an airplane with a banner over the beach, it's Model 3 cannibalizing other models. Now, I think part of that is Tesla-driven. But fundamentally, that's why more and more they're betting the house on Model 3 going forward. Europe demand looks strong. And again, I think logistics was a big issue here. It all comes down to what profitability is going to look like.
Well, Dan, let's talk about that.
We believe right now
it's really important.
The chances of a capital raise have gone up.
Well, if you think that Model 3 is cannibalizing X and S and it's happening quicker than you anticipate, what does that mean for basic assumptions around profitability?
Yeah, I mean, look, that's why profitability in 2Q is going to be tough, which speaks to our price target cut. We also believe the chances of a capital raise, $2 to $3 billion, are probably more than 50% here. And I think that's something investors, I think are becoming clearer and clearer into the view that they might have to raise what I view as $2 to $3 billion of capital in the next few quarters.
And the credit market seems to have got the scent of that as well, Dan, because we're down 2 cents on the dollar to 85 on the 2025 note. So let's talk about the liabilities that are coming up. The convertible matured, it's come and gone. They paid up, great, done. What's on the horizon for the next 12 months?
I mean, look, in terms of obligations, you're going to have, you don't just have the debt coming due later this year, but remember there's CapEx requirements, especially with the build-out of Giga 3 in Shanghai and others. So they can maybe balance it and get through without a capital raise in terms of enough cash to generate, but I think that would be pretty dicey, which is why ultimately we believe with, $1 billion plus of obligations coming due, a $2 to $3 billion capital raise could potentially be on the horizon now.
So, Dan, how much conviction do you have around this price target of 365? It is exactly, as we speak, $100 north of where we trade right now.
Yeah, I mean, look, this comes down to a fork-in-the-road situation. I mean, we believe they can get through this turbulent period and demand comes back in second half, specifically in the U.S. and Europe, and the logistical issues get resolved. And if I look at the trajectory, that's why you have a $365 price target.
Do you have a base case on where...
If there's another stumble, then all bets are off.
Well, do you have a base case on where the capital is raised, whether it's equity, debt, where it comes from, convertibles? What are you looking for, Dan? You've got a 50% chance that they have to raise money this year. Where's it come from?
Oh, I mean, we believe it's probably half and half, but I think equity is most likely the route.